Happy February 7th, JLD here, and welcome to Strategy Today. In this show, we talk about the president launching a Bitcoin ETF, what that means. We talk about how strategy is evolving into a Bitcoin bank. We have a 2025 price prediction, which is pretty interesting. Then I have Michael Saylor really breaking down what Bitcoin yield means. And then this new metric, Bitcoin gain, he talks about what that means as well and why we should be excited about it. This video is not financial advice. Please comment below where you're watching from, any feedback you have on this video, what's going on in the strategy world, and let's dive in. The first post for today, we have Eric Balchunas. He is sharing how Trump is going to launch a Bitcoin Plus ETF. Safe to say, the first ever POTUS ETF issuer. What a country. And then we have Adam Livingston, who is sharing what this means exactly. So Trump's Bitcoin Plus ETF. What does it mean for strategy? Because listen, that's what we care about. No time for clown takes. Let's get straight to it. Strategy is already strapped to the Bitcoin rocket, thanks to Saylor's unwavering, laser-eyed conviction. But now Trump Media and Technology Group, TMTG, waltzes in with a Bitcoin Plus ETF under the Truth.fi brand. And suddenly, we've got a fresh powder keg for BTC exposure. Here's why this could be absolutely monstrous for strategy. The MAGA Money Pipeline. TMTG's brand is a cultural battering ram. You think conservative leading investors weren't already eyeing Bitcoin? Now slap Trump's name on an ETF and watch retail FOMO ignite. Once they start looking for pure Bitcoin plays, they'll find strategy sitting on 471,107 Bitcoin like Smaug hoarding gold. That's bullish as hell. Regulators backed into a corner. The SEC has been slow walking Bitcoin ETFs for years, but Trump pushing his own crypto product, now that's a political spectacle. The Overton window has been shifting under the administration, and the regulators are now opening the floodgates for crypto. Guess who benefits first? The company that's been stacking Bitcoin for years, Strategy. Supply shock on steroids. More Bitcoin exposure equals more demand. If Trump's ETF drives fresh capital into Bitcoin, supply dries up, price explodes, and Strategy's balance sheet balloons without lifting a finger. Every $1,000 a Bitcoin rally juices MSTR's intrinsic value. Maximum volatility equals maximum hype. This isn't a risk-free bet. If Trump's ETF flops or regulators slap it down, BTC sentiment could take a hit. And if strategy is basically Bitcoin's public market proxy, expect some roller coaster action. But if you know Saylor, you know he lives for this kind of high-stakes game theory. Media frenzy. Saylor plus Trump equals free marketing. This isn't just finance, it's entertainment, and we have another 4 years of it under Donnie T. Trump is a media vortex, and Saylor is Bitcoin's most vocal evangelist. The second TMTG's ETF hits headlines, strategy gets name dropped as the original corporate Bitcoin hoarder. That's free exposure, and in a FOMO-driven market, attention equals liquidity. Bottom line, strategy wins either way. If Bitcoin Plus takes off, strategy rides the wave. If regulators ever bend to political pressure, strategy gets vindicated. If Bitcoin moons, strategy prints money. And if you're betting on a hyper Bitcoinized future, the choice is obvious. This market runs on narratives, and the Saylor Trump Bitcoin saga is about to dominate 2025. Stay sharp, stay volatile, stay bullish. And whenever Punter Jeff thinks something is alpha, I tend to keep my eyes on it and agree with him and climb that ladder posted. As of yesterday, I have no covered calls against my 1,000 MSTR leaps, bought them all back for a profit. My bullish intuition is slowly rising from all this predictable, sideways action in December and January. Exciting times. Asymmetry is going to give us a 2025 price targets warning before we start. This is a very bullish target from a very bullish individual, but we're going to talk about it. I'll take a stab, says Asymmetry. 21.1 billion of the 21-21 42 billion plan used so far. Predicted Bitcoin purchases remainder for 2025. 4.3 remain equity from the 21-21. 18 billion remaining fixed income from 21-21. 22.3 billion total. Assuming average Bitcoin price is $125K for 22.3 billion in purchases, 178,400 Bitcoin additional added. This is bear case. I personally believe they complete 21-21 plan and announce additional capital plan before end of year. And that was asymmetry speaking, but I'll add to that. I think this is going to happen as well, personally. Current BTC, 471,000. Current BTC price, 96K. Current BTC stockpile, 45 billion. Cost basis, 30.4 billion or 64,511 per BTC. Bitcoin gain, 15 billion. So 2025 end of year BTC, 650,000. BTC price end of year, 200K. BTC stockpile at the end of the year, 130 billion. Cost basis end of the year, 52.7 billion or 81,077 per Bitcoin. 2025 end of year Bitcoin gain, 77 billion. Considering majority of purchases will be fixed income and not equity, majority of this gain is a true gain, not dilutive. But to be conservative, let's round down to 60 billion Bitcoin gain. 25x, which the average S&P 500 PE is 30x. So this 25x is not out of control. So 25x BTC gain, 1.5 trillion. Share price, 6,000. All right. Bullish, yes. Possible, yes. Chris says, Strategy is the next evolution of a company that envisions itself as a global Bitcoin bank. If you don't believe me or don't get it, I don't have time to convince you. Sorry. And then, of course, he comes with the graphic of Strategy B, of course, Strategy Bank. Now we have this epic video from Michael Saylor talking about Bitcoin yield and Bitcoin gain. So Michael Saylor, take it away.
A few words about BTC yield and BTC gain. First of all, we had a target of 6 to 10% for BTC yield. At this point, we believe for the 2025 calendar year, we can set that target to 15%. So we're adjusting the target up. And what is BTC yield, right? BTC yield is our accretion of Bitcoin per share. If we were a spot ETF, there would be no BTC yield. If we were to sell equity at the net asset value at a 0% premium to the underlying Bitcoin, there would be no BTC yield. If we were to sell equity at a discount to our net asset value, there would be a negative BTC yield. So when we're generating BTC yield, it's because we're engaged in what we believe are accretive capital markets transactions. If we're selling the equity at 150% premium to the underlying assets, it's a much larger yield. If it's a 250% premium, it would be even larger on a given capital basis. As a general rule, the fixed income instruments have a much higher premium to underlying assets than does the straight equity. And so, if we're issuing a convertible bond at a high premium, then for a given amount of capital we raise, the BTC yield would be higher. People wonder, what's the significance of BTC yield? Well, if you think of it, it's not the investment gain from just holding the Bitcoin. If we just hold $50 billion of Bitcoin and it goes up 20% next year, there's a $10 billion type investment gain. That's the same gain that an ETF would have. However, when we issue $20 billion worth of new capital or new securities, and we do it at an effective 100% premium to the underlying assets, half of that is an accretion. And so that's like a $10 billion BTC gain, or it's $10 billion divided by the amount of Bitcoin we have by 50. So that would look like a 20% type BTC yield. So the more intelligently we operate the treasury operations, and the more creatively we do that, the higher that BTC yield will be. And so you could think of BTC yield as a percentage measure of the value that we're creating for the shareholders from intelligent treasury operations. And people talk about and they wonder about the premium to underlying assets and what's merited. Well, I would say figure out what multiple you want to put on the business, and then take that multiple, multiply it by the BTC yield, take a multiple times 15%. That's actually a reasonable target for the premium that ought to sit on time, that the company ought to get over and above its underlying assets. If you believe in a 10 multiple, you'd multiply 10 times 15% and have 150% premium. If you had a lower multiple, if you thought we would only do this once and never again, you would multiply 1 times 15% and say they're going to get a 15% BTC yield once and never again. But of course, that multiple could be anything, and we leave it to our investors to decide what the multiple should be. But the right way to think about BTC yield is a multiple of BTC yield is the premium that a Bitcoin treasury company should get over and above its underlying Bitcoin assets. Why? Because if we just stopped engaging in treasury operations, if all we did was become a holding company and we didn't do any more capital raise ever, then we're just watching the Bitcoin go up or go down based upon the underlying Bitcoin performance, which is just like an ETF. And so that's BTC yield for you. Some people have a hard time with that, which is why we've introduced BTC gain. BTC gain, I think of as the amount of Bitcoin we captured in a non-dilutive fashion. Right? If we actually are engaging in capital markets activities at a premium, we're selling $100 million worth of equity backed by 50 million of Bitcoin. We've captured a $50 million gain, right? That's the way we think of it. If we sold $100 million of equity backed by 100 million of Bitcoin, we'd be capturing a $0 BTC gain. And if we were stupid enough to sell $100 million of equity backed by 200 million of Bitcoin, we would actually generate a $100 million BTC loss. So obviously we won't be doing that. But the power of BTC gain is it's a way to quantify the shareholder value creation of the treasury operation in BTC terms every quarter, or on a deal by deal basis, or on a year by year basis. And you can see here, our target is to generate $10 billion worth of BTC dollar gains in the 2025 calendar year. If we didn't engage in treasury operations, that would be $0. If we engaged in neutral treasury operations with no accretion, no dilution, that would still be $0. We would expand our capital base, but we wouldn't generate a BTC gain. So BTC gain is that measure of value creation. Doesn't go through the P&L. You won't see it as an investment gain. It really is due to intelligent Bitcoin acquisition activities. But we have introduced this in order to make it easier for shareholders to understand the business. So if you're wondering, well, how do I think about the business? I think the Bitcoin treasury operation, if it's able to create $10 billion of BTC gains, it's worth a multiple of that. And of course, you can put the multiple on the operation, whatever you want. Could be 10, could be 20, could be 30, could be 1. It's up to you. But take that multiple, multiply it by BTC dollar gain. That's what we think the operation is worth. Then you can go ahead and add the Bitcoin treasury to it. And that gets you to a value for the enterprise. So with that, we've created these two simple ideas. Our target of the management team is to generate $10 billion of BTC gains this year, and our target is to generate 15% BTC yield this year through our treasury operations.
And there you have it, another episode of Strategy Today. Always an exciting day in the world of Strategy Today. A lot of cool price predictions, a lot of fun things, talking about banks and Bitcoin ETFs, and oh my God, so much stuff going on. So fun. This is not financial advice. Please do comment below if you get value from this video. Your comment means a lot. I love the interactions. I respond to them all. I love the likes. I appreciate the shares. So thank you in advance. And here is my receipt. At 10:47 a.m., price was $331, and I bought 0.64 at $211 total. So Still around half a share a day I'm adding to my MSTR stack, and I'll be DCAing every single day, $210 for all of 2025. I'll be showing you the full portfolio on Saturday. And until then, remember, there is no second best.
What's the second best? There is no second best.